All right, everyone. Ryan made a comment a couple days ago about PLTR and wondering what kind of settings I would use. Especially, he wants to do some day trading, and so I'm going to just quickly do an analysis on this. I don't believe that I will be trading stocks anytime soon. Maybe, I don't know. I don't have much experience with it, but I do have a lot of experience using Lux, and he wants some settings. So we're just going to go ahead and try some out. Obviously, we've seen a big, huge increase, 22% here today alone. So his long position is looking good, I am sure. From a couple days ago, he said he had a long position. Yeah, even if a couple days ago, would have had some drawdown on that, but I mean, up 18% from 2 days ago. So depends on where his long position started. But let's get this guy equipped here with some settings. I went ahead and found 9:17 to be effective on the 15-minute. I'm just going to go ahead and go 12:26 so you can see how I came about those numbers. So I just zoom out, and what I do is that I start bringing down the sensitivity until I feel satisfied that I'm not getting too much noise. And what I found was that when I went to 9, it was okay, but then when I went to 8, it was a little bit. So I went up back to 9 again, and then I started bringing down the agility until, of course, I got too much noise. Some of this doesn't matter because they're not my entries, so I'm okay with that. And you can also confirm your entries using other indicators. I really, really encourage people to use more than just Lux as an indicator, because it has a great set of products to it, there's no question, and I do believe that they are effectively creating a kind of a one-size-fits-all trading system. But always backtest things and compare them with other tools. You might ignore that strong, I think. Let's just double check. Yeah, you didn't. I think you would ignore that strong. And there are reasons for that, but you would ignore that strong simply because it doesn't have a brand new volume breakout. But again, you guys who trade stocks, you're probably going to know what kind of indicators to use better. All I'm doing here is I'm just making sure that we've got the confirmations from Lux as close to the tops and bottoms as we can possibly get. That's the focus. And I mean, you know what, there are few misfires, but they happen, right? Sometimes you just don't even have the reaction time. Price is way down here and then all of a sudden opens here. Of course it's going to be a strong confirmation, right? So yeah, that's what I would do. 9:21 is not bad. 9:17 is what I think I had before. I just don't know why. Maybe it added too much noise somewhere else. Because it's great when you can get them really, really close, but you want to be mindful of some of the noise that can occur. That's good. Yeah, that's where the noise comes in too much. Okay, so 9:17. That's what I would do there for the 15-minute. And what I would then do is just, again, backtest. Make sure that you know what you're doing. Create your rules and stick to them. I think that if you get a strong that's above the green line, you should be okay. If you get a strong, a strong buy confirmation above the cloud, you should be pretty good. If you get a strong below the cloud, I think you're probably pretty good. Especially if you have good volume on the crossing of a line, right? Like here, look at this is nice. This is a nice entry here because we cross down below the line and the EQ line. And previous high is lower than the high before that. So we have lower highs, lower lows. And this is an entry. We've got the volume to support a good trend. Volatility's there and the oscillator's on our side, right? And it turns strong too. So it's a sell, turns strong right on that. So that day, if you got some leverage behind you, that day, you might stop here, be 2%, right? So if you're leveraging that at all, that's a good day, Continuing on to the next day, you might just see this here open way up high and then see it break down below like that, you might just go ahead and be like, yeah, let's keep going down low because it's still inside that strong confirmation from Lux. Here's a buy, but then it starts to drop down below again. Now there's no breakout on volume, so you just might not trade that day, right? And then here to this one, crosses above with the volume and the strength in the bears, and the oscillator just flipped. There's no volatility though, but yeah, that can happen sometimes because it's a pretty slow day, and so that first bar takes a minute for it to catch up, or it takes maybe a couple bars for it to catch up. But I would hesitate to buy only because of that low volatility, right? So and the other thing is that you might not want to trade against the trend that first time. What my trade rules tell me not to trade the first, let me just adjust this a little bit. My trade rules tell me not to trade the first time that I get an indication against a cloud, right? So you might not take that one. But then later on, you've got, here you might not start trading because of the close to the end of the day. But then, first thing in the morning, you see this big drop down, brand new volume, oscillators on your side, you got the volatility, strength is in the bears, you might take this, right? And then you can ride this for the day at 3%. Here we've got an undecided bar right at the open, not even enough volume to break out. Oscillators just like it doesn't even know what it's doing. And then you've got a breakout there, right? That ended up not being a good day for a trade, a day trade that is. Even though you got strength in the bulls, you've got that breakout of volume and the oscillators on your side, you ended up, if you managed to get it, you could get 2% there, but it starts to drop down. And maybe that's, again, you don't want to go against the cloud at all in stocks. This is why we're doing this kind of test. Here's a strong close to the end of the day. I wouldn't enter during that time, and I would wait for that first bar in the morning. Tell me what to do. There's not much there, But there the volume breaks out right there, and the cloud is starting to diminish, right? So then you might just go ahead, coming off of this support level, right? You might go ahead and grab that. That's 4%. Your volume had a breakout, you got strength, oscillators brand new, volatility's low, but you have the strong confirmation from Lux right away as well. Maybe you wait until then, and then you can continue. The next day there, January 6th, breakout going downwards on the volume. You'd have some drawdown that day. Again, volatility, it's marginal, it's right on the threshold basically. You'd have a good day there for sure. Next, we've got a strong confirmation first thing in the morning, obviously. Volatility's good, oscillators on your side. In fact, it's brand new flipped, so that could be good. Gives you another 2%, 2.5%. And this day here opens with bullish volume again. Even though that's a bearish bar, that is bullish volume. It doesn't happen very often. You might take that for the first hour or so. I don't know. There's 3%. But then later in the day, we've got another breakout of volume on this line cross. And so even if you just hold it for the day, rest of the day, that's a 1.5%. So yeah, this is what I would do. Now let's go to the 75-minute chart. I don't want to spend too much time on it. You guys get kind of an idea. This wouldn't really be day trading, to be fair, because you'd need more than 4 bars, right, to do this, or 5 bars. What would this be? 6 bars? 5 bars, yeah. So you'd need more than 5 bars to really get a trend. So this might be intra-day trading. But like, beautiful entry here, strong for Lux. Oh, Lux. Let's get the settings on a 75-minute. Start with 12.26 and we work our way down. Already 12.26 looks pretty good. But let's see what we can do. Okay, so that's a little bit much. So now we can bring down the agility. I'm gonna bring up the sensitivity and then the agility down again, just because I can get rid of some noise and then sometimes push the confirmations further with the agility. Okay, so that's about it right there. So there you have it, 11:21 on the 75 minute. That's what I would do. Nothing that I'm showing you guys here is indicative of what future results might be. So just, manage your money properly, do some back testing, and I would encourage you to do some forward testing with some play money. Make sure that you know what you're doing before you just go ahead and do it. That's how banks make their money, is when people go in not knowing what they're doing, just blindly following someone else's guidance. Do your own research. So yeah, whenever you get a sell from Lux, you might look for corresponding volume, which looks like we have there back in November. That crossing works out pretty good, and over the next few days there's a 19% drop, right? And then coming back up, looks like here's our volume breakout where we actually get confirmation with volume that we've got something to support it. With a good stop loss, you might get 10% out of that. And here's a sell, but no volume. But again, you might use other indicators because there's good volatility and the oscillator just flipped, so you could get, over a period of a couple days, another 5% maybe. It kind of consolidates there, so you'd want to make sure that you don't get caught up in this stuff here. This stuff here is just nasty. I've even got I've noticed sometimes, I haven't really done a full back test on this, but I've noticed sometimes you should not be entering trades while the price action is inside the cloud, because it could go anywhere. I've just noticed it. I haven't done a full back test on whether or not that needs to be a rule, but that's something that I've been thinking about. Here's another breakout of volume going downwards, oscillators on your side, but there's no volatility, so I wouldn't take a trade there. Volatility's gone for a few days until it shows up again on this volume breakout. Nope, still not enough volatility. And it makes sense because, there's that too. Yeah, not much there. There it is. There's a volume breakout going down. Got the oscillator on our side. Strength is in the bears. We're still inside a strong confirmation from Lux, but we had a high that got denied and possibly creating a new low, right? So you might not take this one because it's the first one against the cloud that we got confirmation, but you could take this one. You have strength in the bulls still, but that happens, right? And then if you rode this properly, you might stop out here. That's another 3% over 2 days. Show me a bank that does that. Yeah, right. Here's another breakout of volume here at the beginning of the day. That could last you a while. You're not going to get them all, guys. You're going to miss some opportunities too. But you've got a pretty good success rate just watching that volume, strength, oscillator, and volatility. Some drawdown here, so be careful. Right, that's actually quite a bit of drawdown. I don't know if it's by 58. You're well within money management rules, like my stop loss being at ATR times 1.5. That would be more than sufficient, and then of course you'd be able to profit no problem. So I'm noticing, on the 75 minute, definitely that's going to be like 2-3 days worth of trading. So be mindful of that. 15 minute, you might be able to do it in 1 day, probably more likely 2. But I mean, look at what happened today. Like, that's just beautiful. I hope that Ryan was able to keep his position open. Sorry, I had a phone call there. you know, just this day alone, 19%. I really hope that Ryan was able to keep his long position. So yeah, that's it. I appreciate everybody's comments. Keep them coming. This is what the channel's for. We go ahead and apply some Lux Algo to charts and see what I would do in conjunction with some of my other strategies. So thank you so much. Have a good rest of the day.